Please also note today's event is being recorded. At this time, I'd like to turn the conference call over to Ms. Karen Ji, Senior Director of Capital Markets. Please go ahead, Karen.
Thank you, Darcy. Hello, everyone, and welcome to Qifu Technology's first quarter 2025 earnings conference call. Our earnings release was distributed earlier today and is available on our IR website. Joining me today are Mr. Wu Haisheng, our CEO, Mr. Alex Xu, our CFO, and Mr. Zheng Yan, our CRO. Before we start, I would like to refer you to our safe harbor statement in the earnings press release, which applies to this call as we will make certain forward-looking statements. Also, this call includes discussions of certain non-GAAP financial measures. Please refer to our earnings release, which contains a reconciliation of the non-GAAP financial measures to GAAP financial measures. Also, please note that unless otherwise stated, all figures mentioned in this call are in RMB terms. Before we start, we would like to let you know that today's prepared remarks from our CEO will be delivered in English using an AI-generated voice. Now, I will turn the call over to Mr. Wu Haisheng. Please go ahead.
Hello, everyone. Thank you for joining us today. In the first quarter of 2025, China's economy showed early signs of a mild recovery under the guiding principles of stabilizing growth, optimizing structure, and managing risks. Meanwhile, the global economy is undergoing profound technological transformation and structural changes. In an increasingly complex and volatile environment, we upheld prudent operations, leveraged AI to reshape the credit value chain, and achieved high-quality growth, delivering results that surpassed our expectations. By the end of the quarter, our AI-powered credit decision engine and asset distribution platform empowered a total of 163 financial institutions and served more than 58 million users with approved credit lines on a cumulative basis. Total loan facilitation and origination volume on our platform increased by 15.8% year-over-year. With operational efficiency continuing to improve, our take rate for the quarter reached 5.7%, up 2.2 percentage points year-over-year. Non-GAAP net income increased by 59.9% year-over-year to RMB 1.93 billion, while non-GAAP EPADS on a fully diluted basis rose by 78.5% to RMB 13.5. Despite macroeconomic headwinds, we have consistently improved upon our past results and outperformed our market commitments through ongoing evolvement and enhancements to our business. At the start of this year, we began rolling out our AI Plus credit strategy at scale, aimed at building the industry's first AI agent platform to empower core credit processes. We plan to recruit an additional 100 algorithm engineers by the end of the year and accelerate our transformation into an AI-native organization. We have also established our Deep Bank division, which is driving the research and development of our AI Plus Bank agent products to support the intelligent upgrade of financial institutions. In April, we introduced an internal AI agent platform, and by May, deployed 5 digital employees across key functions such as data analytics, operations, compliance, risk management strategy, and financial reconciliation. Our AI agent, ChatBI, is now deeply integrated into our intelligent decision-making and business analysis workflows. This agent provides real-time data insights and attribution analysis, empowering us to dynamically optimize our strategy and enhance decision efficiency. Risk management has always been a cornerstone of our business. This quarter, we allocated a small portion of our traffic to pilot an end-to-end risk management framework powered by large language models. By training on historical decision logs using DeepSeek, we achieved a notable improvement in AUC, area under curve, to 0.64, a metric that measures risk tiering ability. We also upgraded our data mining capabilities by incorporating video and other multimodal inputs, enabling richer and more diverse feature representations. On top of that, we developed a user profiling agent that performs consistency checks on user features with over 95% accuracy, supporting differentiated credit lines and pricing based on user profiles. In terms of risk strategy, we maintained a differentiated approach in user operations, driving moderate loan growth while preserving ample risk buffers. With loan volume increasing by 15.8% year-over-year during the quarter, our C-to-M2 metric, which measures delinquency rates after 30-day collections, remained largely stable at 0.6%. In Q1, we made further upgrades to our intelligent asset distribution platform to improve the precision of fund asset matching. This helped us boost underwriting efficiency and strike a better balance between risk and return of our loan portfolio. Benefiting from our robust asset quality, we maintained our negotiating leverage on the funding side, resulting in a consistent decline in funding costs. In Q1, we issued RMB 6.6 billion in ABS, a year-over-year increase of approximately 25%. With the proportion of ABS in our funding mix growing further, our overall funding costs decreased by an additional 30 basis points sequentially. We expect funding costs for the coming quarters to decrease slightly from Q1 levels. In terms of user acquisition, we have modestly increased our spending and are actively exploring a broader range of channels. In Q1, we added 1.54 million new credit line users, up 6% year-over-year, with new borrowers increasing approximately 41% year-over-year to 1.13 million. Our marketing-focused AI agent leverages multimodal recognition technology to analyze user intent in real time, integrate campaign management across multiple channels, and enable real-time strategy adjustments. This has significantly improved our user profiling accuracy across channels, with a conversion rate of new credit line users to new borrowers increasing by 33% from the same period last year. Our embedded finance business remains a key strategic focus as we continue to expand both the breadth and depth of our channel coverage. In Q1, we added 7 new channels, spanning from leading internet platforms and various small and mid-sized platforms to banks in multiple regions. We are also in the midst of onboarding 2 additional strategic platforms, signaling broader collaboration with leading internet traffic platforms and unlocking meaningful and incremental growth potential going forward. During the quarter, our new credit line users from the embedded finance channels grew 36% year-over-year, while loan volume surged by roughly 106%. The overall ROA of these channels improved by 20% on a sequential basis. Regarding our technology solutions business, we established partnerships with 3 additional mid to large-sized municipal banks in Q1, driving loan volume from this segment to grow by roughly 144% year-over-year. Powered by our Focus Pro credit tech platform, our proprietary solution for SME lending, which is built on a 3-tiered credit assessment system, gained meaningful scale in loan facilitation volume and delivered better than expected risk performance in Q1. This success has created new opportunities for our market expansion and growth in 2025. We have already received a wide range of inquiries from multiple banks about our AI Plus Bank agent products and recently entered into strategic partnerships with several of them. As a key component of these partnerships, We will help banks deploy AI agents across a broad range of applications, including marketing and customer acquisition, risk management and loan approval, decision analytics, growth operations, compliance reviews, multimodal recognition, remote banking, and digital employees, facilitating their digital and intelligent transformation. In April, China's National Financial Regulatory Administration issued the notice on strengthening the management of the Internet loan facilitation business of commercial banks to enhance the quality and the efficiency of financial services. The notice provides clearer guidance for Internet-based lending practices, emphasizing that commercial banks should establish equal, mutually beneficial partnerships with platform operators and credit enhancement providers, sharing risk responsibilities and adopting a long-term perspective. We view these guidelines as strong regulatory recognition of the value the loan facilitation model provides. By setting clearer industry standards, the notice is expected to improve the overall health and the sustainability of the sector. We will continue to engage in proactive and constructive discussions with regulators, regularly reviewing our practices and upholding prudence and compliance in our operations. The increasingly complex international landscape has added uncertainty to the pace of China's economic recovery. That said, we believe the economy will remain fundamentally resilient over the long run, supported by China's technological innovation, supply chain upgrades, and government measures to boost domestic demand. At the press conference held on May 7 this year, the State Council Information Office announced a package of financial policies aimed at stabilizing markets and managing expectations, including guidance for financial institutions to increase support for key consumption verticals. More recently, we are seeing encouraging progress in U.S.-China trade talks. Overall, the macroeconomic and policy landscape is showing signs of stabilization, which will provide a favorable environment for the steady development of the consumer credit industry. As we progress through 2025, we remain cautiously optimistic. In the near term, our focus will be on enhancing operational efficiency, optimizing capital allocation, and enhancing shareholder returns. Over the long term, we will continue executing our One Core Two Wings strategy. We expect our core loan facilitation business to sustain high-quality growth, while our technology solutions business will continue to empower financial institutions to accelerate their intelligent transformation through our AI Plus strategy. Internationally, we will focus on near-prime segments in markets with relatively stable regulatory environments, leveraging our leading fintech capabilities to build a strong competitive edge. In Q1, we issued $690 million in convertible senior notes, further expanding our international funding channels and improving capital allocation efficiency. 100% of the proceeds from this issuance will be allocated to share buybacks. Adopting a cash par settlement structure allows us to significantly reduce the potential dilution to existing shareholders. On the 25th of March pricing date, we concurrently completed a $227 million share repurchase, resulting in an immediate 3.6% reduction in our share count. Combined with our $450 million share repurchase program that took effect on the 1st of January, we expect our total repurchases this year to be no less than $680 million. Based on the current share price, we estimate our total share count will decrease by approximately 11% when compared to the beginning of the year. We are confident in the future of our company and remain dedicated to delivering long-term value to our shareholders. Moving forward, we will continue to prioritize efficient capital allocation and shareholder value creation through recurring share buybacks and dividends. With that, I will now turn the call over to Alex.
Thank you, Haisheng. Good morning and good evening, everyone. Welcome to our first quarter earnings call. We started 2025 with a solid Q1 as overall user activities was stronger than normal seasonality. While macro environment appeared stabilizing early in the year, impacts from trade war added uncertainty recently. We will continue to focus on efforts to optimize operations and manage risk exposures in an uncertain market. Total revenue for Q1 was 4.69 billion versus 4.48 billion in Q4 and 4.15 billion a year ago. Revenue from credit-driven service, capital heavy, was 3.11 billion in Q1 compared to 2.89 billion in Q4 and 3.02 billion a year ago. The sequential growth was mainly due to increases in on-balance sheet loans and lower early repayment discount. Overall funding costs further declined modestly Q-on-Q as ABS contribute a larger portion of our total funding in Q1. Revenue from platform service, capital light, was 1.58 billion in Q1 compared to 1.59 billion in Q4 and 1.14 billion a year ago. The year-on-year growth was mainly due to strong contribution from ICE and other value-added service, more than offsetting the decline in capital light loan facilitation. Platform service accounted for roughly 56% of quarter-ending loan balance. We expect the ratio to be roughly stable in the near term. During the quarter, average IRR of the loans we originated and or facilitated was 21.4% compared to 21.3% in prior quarter. Looking forward, we expect pricing to be fluctuated around this level for the coming quarters. Sales and marketing expenses increased 13% Q-on-Q and 42% year-on-year. The sequential and year-on-year increase were mainly due to larger volume contribution from API channels in both new and existing users. We added approximately 1.54 million new credit line users in Q1 versus 1.69 million in Q4. We will make timely adjustment to the pace of new user acquisition in the coming months, given the volatile macro condition, and further optimize our user acquisition channels and improve user engagement and retention. 90-day delinquency rate was 2.02% in Q1 compared to 2.09% in Q4. Day one delinquency was 5.0% in Q1 versus 4.8% in Q4. 30-day collection rate was 88.1% in Q1, essentially flat Q-on-Q. Another key risk metric, C-M2, which represent the outstanding delinquent rate after the 30-day collection, increased modestly Q-on-Q to 0.6%, still within our comfortable range. We will remain vigilant to manage overall risk exposure, particularly given the latest macro uncertainty, and try to maintain relatively stable risk metrics in the coming quarters. At the same time, we continue to take a conservative approach to book provisions against potential credit losses. Total new provision for risk-bearing loans in Q1 were approximately 2.23 billion versus 2.07 billion in Q4. The increase in new provision was mainly due to increases in risk-bearing loan volume Q-on-Q and higher provision booking ratio. Write-backs of previous provisions were approximately 1.14 billion in Q1 versus 1.02 billion in Q4. Provision coverage ratio, which is defined as the total outstanding provisions divided by total outstanding delinquent risk-bearing loan balance between 90 and 180 days, were 666% in Q1, a historical high, compared to 617% in Q4. Non-GAAP net profit was 1.93 billion in Q1, compared to 1.97 billion in Q4. Non-GAAP net income per fully diluted ADS were 13.53 in Q1 compared to 13.66 in Q4 and 7.58 a year ago, as strong earning growth and proactive share repurchase created significant EP ADS accretion. At the end of Q1, total outstanding ADS share count was approximately 134.5 million, compared to 142 million at the end of Q4 and 155 million a year ago. Effective tax rate for Q1 was 18% compared to our typical ETR of approximately 15%. The higher than normal ETR was mainly due to withholding tax provision related to cash distribution from onshore to offshore. With higher contribution from capital-heavy models, our leverage ratio, which is defined as risk-bearing loan balance divided by shareholders' equity, was 2.7 times in Q1, still near the low end of historical range. We expect to see the leverage ratio fluctuated around this level in the near future. We generate approximately 2.81 billion cash from operation in Q1 compared to 3.05 billion in Q4. Total cash and cash equivalent and short-term investment was 14.03 billion in Q1 compared to 10.36 billion in Q4. The increase in cash was mainly due to the net proceeds from our $690 million CB issuance. As we continue to generate strong cash flow from operation, we will further optimize our capital allocation to support our business initiatives and to return to our shareholders. We start to execute the 450 million share repurchase plan on January 1st. As of May 19, 2025, we had in aggregate purchased approximately 4.4 million ADS in the open market for a total amount approximately $178 million, inclusive of commissions, at the average price of $40.2 per ADS, ahead of the time schedule. In addition, on March 25, we successfully priced our $690 million CB offering and repurchased approximately 5.1 million ADSs concurrently with the aggregate value of approximately $227 million. The concurrent buyback and the net share settlement mechanism make the CB immediately accreted to EP ADS at issuance. Altogether, so far in 2025, we brought back approximately 9.6 million ADS for a total amount of $405 million, including commissions, at an average price of $42.3 per ADS. The accelerated pace of share repurchase further demonstrates management confidence and commitment to the future of the company, and the management intend to further use share repurchase to achieve actual EP ADS accretion. Finally, regarding our business outlook, while we observed some tentative sign of marginal improvement in user activity early in the year, micro uncertainties persist. We will continue to take a prudent approach in business planning for 2025 and focus on enhancing efficiency of our operation. For the second quarter of 2025, the company expects to generate non-GAAP net income between RMB 1.75 billion and RMB 1.85 billion, representing a year-on-year growth between 24 and 31%. This outlook reflects the company's current and preliminary view, which is subject to material changes. With that, I would like to conclude our prepared remarks. Operator, we can now take some questions.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you're on a speakerphone, please pick up the handset to ask your question. For those who can speak Chinese, please start your question in Chinese, followed by English translation. To allow enough time to address everyone on the call, please keep it to 1 question and 1 follow-up, and return to the queue if you have more questions. Thank you. Your first question comes from Richard Zhu from Morgan Stanley. Please go ahead.
感谢管理层给我一个第一个提问机会，我有2个问题。首先呢，就想问一下这个，估计这个10月份这个助贷新规对行业以及公司的业务，总体来看呀会有哪些影响？第二呢，就是目前资产质量的趋势怎么样？因为毕竟这个最近宏观可能也有一些担心和波动。那么现在跟22年下半年或者23年下半年比，情况如何？这个目前的风险情况会不会影响全年的这个放贷的量增长？是跟年初这个放贷还会是不是比较一致？So I'll just do a translation. There's 2 questions. What kind of impact of changes do we expect once the new loan facilitation rules come into effect in October 2025? Secondly, is what's the latest trends QFIN is seeing on the credit quality? How does it compare to second half of 2022 and 2023? When QFIN was started to tighten credit risks, will that impact the total expected loan growth for the year? Thank you.
Okay, Richard, thank you. Let me take your first question, and our CRO will answer your second question. In terms of regulation, in our opinion, the new rules released in April is a positive signal in the sense that regulator recognize the value of loan facilitation platforms. The regulator's intention is to promote a more orderly and healthy development of the industry, setting principles and gradually sequencing out the long-tail platforms which are less capable of complying with the industry standards and meets regulatory requirements. At the same time, the new rules recognize the value of leading loan facilitation platforms and encourage banks to adopt a whitelist approach, set clear entry standards, and build equal, long-term, and mutually beneficial partnerships based on risk sharing. In conclusion, with the implementation of the new rules, the industry will become more organized, which will enhance the overall health and the sustainability of the loan facilitation sector. As a leading industry player, we believe we will benefit from the less competitive market environment. We will continue to engage in proactive and constructive discussions with regulators, review our practices, and operate with prudence and in compliance. And for your second question, Zhen Yan, can you answer it?
好的，那我用中文回答一下，然后待会请凯伦帮忙翻译一下。就关于资产质量这一块呢，我们认为现在公司目前的资产质量趋势是比较平稳的。我们的 C-MR 这个指标是在很窄的区间内小幅的波动，是符合我们预期的。那首先我们认为呢，风险的情况跟22年和23年的下半年是完全不具备可比性的。22年下半年的时候 C-MR 是 0.64。23年下半年的时候，是平均是 0.69。对，那这23年下半年除了宏观层面的不确定性以外，还有线路问题的一些影响。那 Q1 的25年 Q1 的 C-MR 呢是 0.6，对比22年下半年和23年下半年都是要更好一些的，而且接下去也会是一个相对平稳的趋势。那其次呢，目前的风险是完全可控的，我们并不需要大范围的去调整风控策略，所以全年的放款量呢，主要还是取决于需求本身的变化。今年 Q1 我们看到信贷需求温和复苏，整个趋势呢是呈现出企稳的迹象，但是目前的国际形势还是增加了宏观环境的一些不确定性，所以虽然近期中美对话取得了积极的进展，但是后续的进展以及对宏观经济的影响还需要进一步的观察，我们还是会持续的保持审慎的经营策略。最后呢，我想说一下，就是我们的业务模式还是比较多元化的，我们完全可以通过调整资产分发策略来平衡增长和风险。所以基于目前的情况， 全年的放款量预期和年初相比变化是不大的。
Okay, let me do the translation for Mr. Zheng. First of all, I want to say that so far our asset quality has remained largely stable. Our C2M2 ratio, which measures the delinquency rate after 30-day collections, has fluctuated within a narrow band, which is in line with our expectations. First, we believe that current situation is completely incomparable to that in the second half of 2022 and 2023. Our average C2M2 ratio was 0.64% in the second half of 2022 and 0.69% in the second half of 2023. The volatility in the second half of 2023 was partially due to the macro uncertainties and some line controls by China's telecom carriers. In Q1, our C2M2 ratio came in at 0.6%, which is significantly better than the second half of 2022 and 2023, and we expect this matrix to remain largely stable going forward. Right now, our risk levels remain well under control, and we don't see a need to make any major adjustment to our risk policies. Therefore, as for the loan volume growth on a full year basis, it will largely depend on the consumer's credit demand. In Q1, we saw early signs of a mild recovery in credit demand, and overall trend also seemed to be stabilizing. However, the consistently changing global trade environment has increased macro uncertainties. While recent U.S.-China talks have shown some encouraging progress, we still need to monitor how things will develop and what kind of impact that will have on China's economy. So we will stay prudent in our operations at this moment. Last, I want to say that our business model is quite diversified, meaning that we can easily shift between asset heavy and asset light. That gives us the flexibility to adjust our asset allocation and balance between growth and risk. Based on what we've seen now, our outlook for full year loan volume growth is largely unchanged from what we expected at the early start of the year. Thank you.
Thank you. Your next question comes from Alex Xu from UBS. Please go ahead.
管理层好，感谢给我这个提问的机会。我这边也是两个问题，第一个关于资产质量这一块是想再跟进请教一下，关于这个我们看到这个 Day One 的 delinquency ratio， 过去2个季度有连续的一个上升，然后这个季度达到了5.0%， 然后同时也带动这个 C2M2 达到了 0.60%， 想请问一下这个主要的这个原因是什么，然后以及我们可能预期后续这一块的这些资产质量指标的趋势要如何去展望。然后第二个问题是关于信贷需求这一块，主要是想请教一下，特别是4到5月以来，我们也看到很多宏观或者是外部环境的一些扰动吧，想看看说近2个月来这个资产这个信贷需求的一个趋势的一个情况和3月份情况相比如何？谢谢。I'll do a translation. So my first question is about the asset quality indicators. Specifically, we saw Day One delinquency ratio was up by 2 consecutive quarters and now reaching 5.0% in the quarter, and then also bringing C2M2 ratio to the 0.60%. So can you share with us more color on the reason behind, and how do you expect this indicator to trend going forward? And the second question is on the credit demand trends in the last 2 months, since we are seeing more noises coming from the external environments. So just wondering how has been the Q&Q trend in terms of credit demand. Thank you.
好的，首先我先回答一下风险这块的问题啊，就是C-M2的小幅波动是符合公司预期的，然后也是在我们风控所设定的目标范围之内的。然后前面其实也讲了，也分享了23年的一个情况。那目前我们的资产质量相比之前来说还是处于 历史上比较不错的一个水平的。然后呢，我解释一下第一的变动啊，这入催率上升呢，主要是受到结构变化的影响，有2块结构的影响，一块呢是Q1 API 渠道的放款量占比环比有上升31%，那 API 业务的逾期入催率呢是比 APPH5 业务会来得更高一些的啊，那这一块结构的变化本身会导致Day 1的变化。那第2个结构呢是由于 Q1 的放款量环比是没有太多增长的啊，没有增长，那这个会导致业务结构中早期放款占比会下降，而早期放款的 Day 1是相对来说比较低的，对，所以这个比例下降之后呢，也会导致大盘的 Day 1略有上升，所以是这2个结构共同去影响了Day 1的这个率的一个上升。那从回收率来看的话，前面 CFO 也讲了，就是这个季度还是保持了比较平稳的一个水平啊。那当4月份的时候呢，由于对关税影响的一些不确定性吧，我们小幅收缩了风控标准啊。目前4、5月份的风险指标看起来都是比较平稳的。那后续我们也会动态去调整风控啊。假设宏观环境不发生大的变化的情况下，我们估计全年的 C-M2 是可以控制在 0.6 上下的。
Okay. First of all, I want to say that the slight fluctuation in our C2M2 ratio were in line with our expectations and also well within the target range we have set for our risk performance. Overall speaking, our asset quality is at a healthy level compared to historical trends. As for the increase in the Day 1 delinquency rate, it was mainly driven by the change in our loan mix. In Q1, the percentage of loan volume from our embedded finance channel increased by 31% from last quarter, and this business line usually has a higher Day 1 delinquency rate compared to our app-based or H5-based business. Also, our overall loan volume was roughly flat Q-on-Q, leading to a smaller portion of early-stage loans, which usually have a lower Day 1 delinquency rate. These two structural change has led to a slight increase in our Day 1 delinquency rate. And our collection rate is very stable, as our CFO just mentioned in his prepared remarks. In April, given the uncertainty around tariff impact, we slightly tightened our credit standards. Since then, our risk indicators have remained stable through both April and May. Moving forward, we will continue to adjust our risk strategy on a dynamic basis. We expect our C2M2 ratio for the full year to remain largely stable around 0.6 level, based on the assumption that the macro environment doesn't change dramatically. Thank you.
And in terms of the credit demand, Alex, for the average daily loan volume, April was roughly in line with March. We did see some fluctuation in borrower activities due to the impact of US-China trade tensions. But we proactively expand our customer reach through partnership with diversified channels. We should be able to mitigate the potential decline in credit demand. In May, credit demand slightly decreased sequentially, partly due to the May Day holiday. But this is just normal seasonality. Based on what we are seeing now, we expect loan volume in Q2 will be largely on track as we planned at the start of the year. Thank you.
Thank you. Your next question comes from Emma Zhu from Bank of America Securities. Please go ahead.
谢谢给我提问的机会，我这里有2个问题。第一个是还想再问一下，就是管理层是如何评估关税冲突的潜在影响的，以及是否会在未来收紧贷款的投放。第二个问题想问一下是，管理层对于 ADR 退市目前是采取什么的风险？对于 ADR 退市潜在退市的风险，目前会采取什么样的对策？ 是否会考虑在香港做这个双重主要上市，以及对于改善这个香港这边股票的流动性是有怎样的想法？So with recent China-US trade escalation, how do you assess the potential impact of the tariff tensions in the future, and will you tighten lending standards? And my second question is, what strategy is management currently adopting regarding potential ADR delisting risk? Will you consider a dual primary listing in Hong Kong? Will you take measures to improve the liquidity of your Hong Kong ticker?
Okay. Hi, Emma. In terms of tariffs, we believe the direct impact of tariffs on our business is quite limited. First, the vast majority of our loan volume is in consumer lending. Second, we reviewed the industries of our users are involved in. In Q1, those related to exports accounted for just around 4% of our total loan volume. Among them, only about 1% were in sectors likely to be significantly impacted by U.S. tariffs. For these users, we have already adjusted our transaction and asset allocation strategies to mitigate potential impact from tariffs. On the policy side, U.S.-China tariff talks have achieved some encouraging progress, and we view that as a positive for both credit demand and asset quality. However, the global trade landscape has been shifting quite a bit this year, and this has added uncertainty to China's macro environment and may affect people's consumption sentiment. Weaker exports could put pressure on areas such as capex and household consumption. So in April, out of caution, we slightly tightened our risk strategy. So far, overall risk levels have remained largely stable. We will continue to monitor how the tariff situation impacts risk performance and dynamically adjust our strategy as needed. In addition, our diversified business model also makes us more flexible to react to the potential challenges. And for your second question, CFO, you can answer it.
Sure, Emma. As you know, this ADR delisting basically resurfaces every few years, depending on the U.S. side of a political need. Given that, in early May, the U.S. and China entered into at least a tentative kind of agreement on the tariff. So, compared to early April, I think the delisting risk clearly reduced by quite a bit. But with that said, we have been carefully evaluating the potential risk of the delisting. I think we're well prepared, and we have a very clear plan to respond what if kind of a scenario. As you know, in November 2022, we completed secondary listing in Hong Kong. This basically has give our shareholders more flexibility. They can choose to continue trading in the US or move to the Hong Kong market. So even in the worst case scenario where when our ADS are forced to delist, investor would still be able to trade on our shares seamlessly in Hong Kong. As for liquidity, currently about 99% of our trading volume is in the US market, and in Hong Kong, obviously it's very, very light. This mainly because US trading offers investors more flexibility and relatively low transaction cost. However, if a forced delist were to happen, all the tradings would probably naturally shift from the US to Hong Kong. And accordingly, the liquidity in Hong Kong will, for sure, improve significantly. At that point, and our Hong Kong listing would automatically convert from a secondary listing to a primary listing in accordance with the Hong Kong exchange rules. Okay. and we only need to file some additional documents after that conversion, or secondary to primary convert happening as after providing the document support. Therefore, we believe the secondary listing that we already have already provides sufficient protection for our shareholders. We will continue to obviously monitor as the situation evolves and take correct measures based on our ongoing assessment on this matter. Thank you.
Thank you. Your next question comes from Cindy Wang from China Renaissance. Please go ahead.
好的，谢谢管理层给我这个提问的机会。然后我这里有个小问题是关于获客这一段。那第一个我们看到就是说本季度这个新授信用户的数量其实环比是下降了9%，但单位的这个授信成本是环比有上升了23%。那可以跟我们大概展开说明这个背后的原因是什么吗？然后第二个的话就是说，因为4月以来这个贸易战带来的一些潜在的贷款需求可能是放缓的，那是否有影响到我们这个新获客的一个质量？然后在获客手段上有没有做怎么样的一个调整？然后管理层怎么看这个第二季度的一个获客成本？那我很快的翻译一下我的问题。Thanks for taking my question. So in first quarter, the number of new users with approved credit was down 9% sequentially, but the CAC up 23%. So what is the reasoning behind it? And since April, the trade war may cause a potential slowdown in loan demand. Has it affected the quality of new borrowers? And have you adjusted customer acquisition strategy? So how do you expect the customer acquisition cost in second quarter? Thank you.
Okay, Cindy. First, the increase in unit customer acquisition cost in Q1 was mainly driven by a change in our business mix. About 30% of our sales expenses came from API channels in the quarter. Unlike other channels, we pay channel fees for both new borrowers and repeat borrowers for API. But when we calculate cost per user, we only count new users, not repeat ones. So when API channels contribute to a higher percentage of loan volume, it pushes up our unit acquisition cost. However, the API channels are generating incremental loan volume for the company, and the acquisition cost per loan through API is much lower than in-feed marketing. We are able to recover the cost with just the first loan issuance. In addition, we increased spending on in-feed marketing this quarter to reach higher quality users. Although these channels usually have higher acquisition costs compared to others, such as App Store or data-driven marketing, users from these channels tend to deliver stronger and healthier value in the medium to long term. We have also tried new strategies in this space, tailoring our approach to different pricing segments and applying different operations across the full year journey. Furthermore, I want to say that we pay more attention to the efficiency of customer acquisition rather than the cost of customer acquisition. As we optimize the entire acquisition journey, the end-to-end approach has made our targeting more accurate in terms of both user quality and intent. This in turn boosts our overall lending efficiency for new users. This quarter, our conversion rate from new credit line users to new borrowers reached 74%, up from around 55% in the same period last year. That is to say that our end-to-end customer acquisition efficiency remains very healthy. Since the start of Q2, users' credit needs have been affected by the ongoing trade tension, which In turn, we also have a certain impact on our customer acquisition efficiency. Going forward, we will continue to closely monitor change in the macro environment and the competitive landscape, and adjust our acquisition pace accordingly. We will also carefully evaluate our acquisition cost against the LTV of new users, and further optimize our channels to improve efficiency. Thank you.
Thank you. Your next question comes from Yada Li from CICC. Please go ahead.
管理层好，感谢给我一个提问的机会。今天想请教一下，在目前国内促消费的这样的一些政策的导向之下，如何去展望未来需求端，然后银行资金供给充裕的程度，以及未来公司放缓策略的一些趋势的变化。那在这样的情况下，是否可以去期待公司资金成本长期都可以保持在一个较低的水平，以及是否可以期待公司未来会有更积极的放缓策略？非常感谢管理层。Then I'll do the translation. My question is, given the policy stimulus to promote domestic consumption, looking ahead, how to view the trend of loan demand, funding liquidity from bank partners, and the company's loan strategy? Amid this recovery environment, can we expect that the company can maintain a low funding cost in the long run and may adopt a more proactive loan strategy in the future? That's all. Thank you.
Okay, Yada. Since the start of the year, China has rolled out a range of supportive policies aimed at boosting consumption, such as trade-in subsidies and guidelines for stronger support to consumer lending. These measures have made a positive impact, as we can see in the Q1 macro data. Retail sales were up 4.6% year-over-year, beating market expectations. Credit demand on our platform was also slightly better than typical seasonal trends. On the funding side, the government announced cuts to both the interest rate and the reserve ratio in May. So we expect the funding environment to remain relatively supportive this year, with some room for a further decrease in funding costs. In addition, we plan to further expand our ABS issuance and optimize our funding structure. Overall, we expect our funding cost for 2025 to decrease slightly from Q1 levels. And finally, about our lending strategy, I think it really depends on the risk outlook and the customer demand. Although our risk indicators remain largely stable at the moment, there is still some uncertainty in the broader macro environment. Therefore, we will continue to maintain a prudent strategy, pursuing high quality and sustainable growth. That's all. Thank you.
Yeah, I just want to add one little point here. So as you know, we are very much focused on the take rate of our portfolio. And as in our previous discussion with the market, we communicate that we continue to see from a full year basis, we'll continue to see improvement this year 25 versus 24 in terms of the net take rate, assuming there's no dramatic macro changes from now to the year end. I think that's still the assumption we're looking at, and I think that's still on target. Thank you.
Thank you. There are no further questions at this time. I'll now hand back to management for closing remarks.
Okay. Thank you everyone to join us for this conference call. If you have any additional questions, feel free to contact us offline. Thank you.
Thank you. That does conclude our conference for today. Thank you for participating. You may now disconnect.